the month of June was largely a factor of liquidity and global strength. I mean, there was not so much local news which in a sense really impacted the market. There was geopolitics, there was a lot of news which came again on the tariff front in terms of how smooth the negotiations were moving. So global, and then the big US bill. So the setting on the table, I think, is a function of global strength. Global strength is coming because global markets are convinced that in the near term there is abundant and more liquidity. Despite that liquidity, inflation is not moving up, and the tariff issue seems to be sorted, which in a sense has taken the markets higher to almost a new high for major markets which really matter. But as we migrate from June to July, which we've already done, the landscape will change. It will no longer be assumptions, liquidity. The market would be reacting to news flow. Of course, there are earnings, GST, and the final blueprint on where tariff is moving or tariffs are moving perhaps would be out. So unlike the month of June, where it was liquidity, it was geopolitical news, it was assumption that inflation will remain low, I think all of that will get challenged. So I expect that July would be dramatically different for global markets, and at least for our markets, considering that the whole narrative of the market would be based on facts and numbers and delivery rather than assumptions and perhaps opinions.
Oh yeah, absolutely. And there is still a question mark on tariffs. But here's what we know. Donald Trump stating that he signed some letters and they'll go out on Monday. That's today, probably 12. Different amounts of money, different amount of tariffs, and of course, different countries as well. Also, the U.S. Treasury Secretary, Scott Bessent, has said that President Trump's going to be sending letters to some of our trading partners saying that if you don't move things along, then on August 1st, you will be boomeranging back to your April 2 tariff levels. So it seems like something concrete is going to come by, at least in the next day or two. But at the same time, I think from a market perspective, the markets will pretty much move on beyond reacting to the news on tariffs. But here's what Donald Trump actually said.
Sending letters out on Monday having to do with the trade deals. Could be 12, maybe 15. Secretary of Commerce right here. And I guess, Howard, I would say it could be maybe as many as 15 or so. And they'll be going out on Monday, and some will go out on Tuesday and Wednesday, and and we've made deals also. So we're going to have a combination of letters, and some deals have been made.
Okay, what else? Let's look at the Indian markets. And for the week gone by, the Indian markets, in a sense, did not pivot in a very specific direction. Now, where you have seen a bit of a lack of follow-up is, even though you've stayed consistently above 25,200, FI flows have been strong, DIs have not been selling, we did not have any large IPO, the news flow globally was strong. Indian markets are just stuck in a range. Nifty down 1%, small and mid cap stocks 0.5%, 0.25%. So the inertia in the market, I guess, was just not there. Broad section of the market, if you speak to them, they are of the view that this market is not headed anywhere. It will be range bound for a long period of time, and something has to change both locally and globally for markets to explode or to implode. What that factor could be, I don't see anything on the horizon. So I will not be surprised that if market really, we sail in the same boat, so to speak, where we may just be ambling in, let's say, 500 point kind of in range. Because if the market had to adjust to the elements of short covering, or it had to react to the Jane Street fiasco, it would have broken out midweek when we comfortably crossed 25,200, or it would have imploded on Friday on fear that the liquidity in the FNO market actually would dry up. But bad news is getting ignored. Good news, in a sense, is getting also capitalized. So it may sound boring, dull, but you are in that zone of the market where you just have to say, okay, I'll come, I'll wait, I'll watch. It's like a classic test match which is at play. Yeah, the runs have been scored higher, but to win the test match, you really have to wait for that ball. And I think we are in that kind of an phase of the market. Now you wait for that shakeout or that shakeup, and then you have to perhaps lay your bets. I mean, for example, at some point in time, trend will become attractive. At some point in time, OMCs will start become attractive. At some point in time, because of low interest rates, PSU banks will start looking attractive. So you'll have to just wait for that loose ball, if I may say, and then perhaps swing your bat.
Okay, well, you wait for that perfect swing. But for the global markets, while of course there was no handover from the US equity markets on Friday, they were